Even though we got those strong results, some of those retail names, as well as the broader market here, trading to the downside with less than 60 minutes to go in the trading day. Dow, S&P, and NASDAQ all negative here. Big tech leading the way lower in the final hour. We want to bring in Scott Wren. He's Wells Fargo Advisors Managing Director and also Senior Equity Strategist. And Scott, when you look at, I guess, the dynamics at play in the market today, we started off in the green, yet we've seen a little bit of selling pressure here in the final couple hours of the trading day. What do you make of today's action and really just the overall sentiment from investors right now?
Well, I think, Shauna, you could generalize really just the recent action. And that's, there's still an underlying uncertainty is, are we going to have some inflation that becomes ingrained in 2, 3, 4, 5 years, kind of a time frame down the road? Are we going to see accelerating inflation, or is it going to be transitory? So that's certainly an issue. We've seen great earnings news. There's no doubt about that. But the markets run long and hard. And just to take a time out after the kind of run that we've had, I think that's natural, especially when there's a few uncertainties out there. If you look at some of these economic surprise indices, a lot less of the data is that much of a surprise in the U.S. In other words, economists have kind of caught up with all the good news that's been out there. So I think you have a few different things at play, but largely the concern is, as you look ahead, is inflation going to get up and running, right? And is that going to be a long-term problem?
And I am grateful that we got a copy of your most recent note on that, Scott, because you say sustained inflation increase is unlikely. But what's really, I think, on the minds of a lot of us as investors is if there is some inflation, it will have an impact on the price of the equities we might wish to purchase, because that's going to impact their earnings. And you pointed to the 1970s when inflation, many people today won't remember, was quite horrific. What was your conclusion? Because some people are worried we might be headed there.
Well, I tell you, for us, Adam, we think it's transitory. And as hesitant as I am to use the same word that the Fed does, I'm going to use it. So for us, we're coming out of this big hole, obviously a very deep but short recession. You look at things like the price of copper, it's more than doubled. There was little demand a year ago. Now there's a lot of demand, and we all know about the supply chain disruptions, which has really played into it. But for us, I think you're going to see some higher inflation numbers. Certainly these recent CPI, PPI numbers, they were higher than expected. But over the course of the balance of this year and into 2022, we think those inflation numbers, when you look at the year-over-year comparisons, they're not going to be up there. If you look at things also like the futures prices for delivery a year out on lumber, steel, they're dramatically lower than where they are right now in the spot market. So all of those things, demographics, there's a lot of things that play into this inflation call. But for us, I guess the bottom line is we do think it's transitory.
And Scott, with that in mind, for investors that are looking to put money to work right now, what works well in this environment from your perspective?
Well, we have for a long, long time, we had been overweight technology. We had been overweight the consumer discretionary sector. And technically, we still are. But the things that we've gained more interest in, let's say over the last 6 months or so, things like materials, industrial, clearly, the yield curve's kind of stuck where it is right now, but it's likely to steepen as we go forward. We think interest rates are going to be a little bit higher, not a lot higher. So those are some of the things that we really like. We continue to like small caps here, even though, that performance just very lately here has been a little bit dicier, but we still like that. We still like emerging markets as well. Once again, stumbled here a little bit, but when we look out over the next 6, 12, 18 months, those are the kind of plays that we want to make. We're leaning toward a continuation of this recovery, not just here in the States, but globally as well.
Scott Wren, always great to get your perspective. Wells Fargo Advisors Managing Director and Senior Equity Strategist.